The global sustainability strategy is a bottom-up stock picking strategy. These three megatrends are healthcare, energy, and technology. More and more people are retiring wealthy, and as the population pyramid bulges at the upper middle, retirees are going to spend money on improving the quality of their retirement. That's a huge opportunity for healthcare stocks. In energy, yes, we're increasing the supply of renewables at an unprecedented rate, but it's only going to meet the increase in population, which is growing at around 0.9% each year. As the 7 of the 8 billion people increase their energy consumption every year as well, that tailwind for energy demand means that we're going to need more energy than even renewables can meet. So renewables are going to do well, the clean energy supply chain will do well, but also traditional energy might also do well. We're going to look for the most efficient, the most green and sustainable ways of playing that theme. In technology, automation and digitalization. Again, aging populations mean there's more demand for automation, and there's always more demand for productivity. And these software and hardware companies enable that demand. Sustainability for us in the global sustainability strategy is simply an augmentation of the traditional fundamental approach. That fundamental approach is quality and growth at reasonable price. Quality means companies that are counter-cyclical, meaning they have healthy balance sheets that enable them to take advantage of growing the business when prices are low, and then making more money when prices are high, meeting that additional demand in the good times. These are companies with strong pricing power throughout the business cycle. Also, quality companies are those that have efficient and low-risk operations, so the internal assessment of the sustainability, we call that the company's footprint. We're looking for best-in-class sustainability footprints. Within growth, we're looking for companies that benefit from a growing market and maybe even taking market share within that market growth. So often, these opportunities pertain to sustainability. We've already talked about healthcare and technology and energy transition, but there are many ways in which companies can actually make money by addressing sustainability challenges. The key thing for us to think about with sustainable investing is that sometimes these companies can get overhyped and the valuations can get too dear. We're really disciplined in looking in unusual ways to play this transition to a sustainable economy so that we can find attractive valuations. Again, our process is quality growth at reasonable price. So the outlook for this year has to take into account what's happened in the last year. In the last year, we saw our businesses with a quality and growth bias have actually maintained their earnings power, but the valuations for those businesses have come in. So a derating, but actual positive earnings momentum should be a really positive outlook for the year ahead. These high quality companies are just at better prices. The other thing to consider for our strategy is we're looking for companies with strong pricing power in any market dynamic. So we don't really have to make the macro predictions right. We're much more focused on getting the bottom-up stock picks correct so that these companies are going to be durable and resilient to any macro environment. The final thing to mention is that potentially the opportunities in emerging markets are really interesting right now. The long-term demographic backdrop for emerging markets is really positive. We've been incrementally increasing our exposure and we'll look to continue to find opportunities within that space. So the opportunities we're positioned to take advantage of in the year ahead are around healthcare, but also unusual ways of playing the energy transition, including technology hardware. Semiconductors are right at the epicenter of the innovation that enables a lower cost of energy for things like batteries and renewables, and also increases energy efficiency of things like cloud computing, all of which helps us in our efforts to reduce the impact of climate change.